Good afternoon, everyone. We'll just wait for a few more seconds for for everyone to settle in. It will be a more informative, interactive conversation. Any information that could be of assistance or resource, by all means, don't hesitate. We're family. Any way I can to help you out, that's what I'm here for. Also, I'm gonna go with some general housekeeping items. This is a recorded webinar, so all participants will be receiving today's presentation and also the link for YouTube channel. So strongly encourage you to like and subscribe. Also, if you have any questions throughout the presentation, I strongly encourage you to put them in the Q&A so that throughout the presentation and also to the end, I'll be more than happy to answer your question for you. Okay. Also, it's a good opportunity for you to introduce yourself. What are some financial struggles, obstacles, challenges that you're experiencing, or even looking for capital assistance? We have specialized consultants that can assist you in that regard, and they'll be able to guide you through the entire process of the loan packaging and which loan is best for you. So this presentation will be more getting yourself familiarized with the different financial options so that it will be able to enhance the conversation with our access to capital consultant. Okay. So if you have any questions, strongly encourage you to put them in the Q&A, and like that, I'll be able to present and answer those questions throughout the presentation as well. And also, if you introduce yourself, what type of business you have, right there, we'll be able to network and also have some ideas and some examples through today's presentation as well. So just to go briefly in regards of what is the Miami-Dade Business Navigator Program, it is funded through a cooperative agreement with the Small Business Administration. It was established in part of the American Rescue Plan Act of 2021. It uses a community navigator approach to help you, the small business owners, in the economic recovery, in which the program is comprised as a lead hub, that is the Florida SBDC at FIU, working with a center of network of spoke organizations that deploy community advocates to work with small businesses. Hey, Sherry, how are you? Once again, the program is placed on businesses owned by veterans, women, as well as socially and economically disadvantaged individuals. Along with the Florida SBDC at FIU, we have 6 other organizations that can assist you with your business needs, if it's access to capital, marketing, operations, government contracting, just to name a few items of what a small business entails. These 7 organizations are able to assist you under the umbrella of the Miami-Dade Business Navigator Program. In this case, we have Ascendus that work and focus on the microloans. We'll touch more about that throughout the presentation. We have branches that work with micro businesses and also the credit repair assistance, the EDC of South Miami-Dade, the Miami-Dade Chamber of Commerce, Lospeda, Startup FIU Procurement, and the Florida SBDC at FIU. So once again, these 7 organizations are able to assist you at no cost with your business needs. So definitely strongly encourage you to take advantage of this opportunity to network, learn. Let's throw spaghetti to the wall. Let's see what kind of spaghetti actually does stick with the strategies and the goals that you have set forth for your business. The coalition, the Coalition of Partners secured a $2.5 million grant for businesses located here in Miami-Dade County. If your business is located in Palm Beach, Broward, and Monroe County, we still will be able to assist you in the Miami-Dade Business Navigator Program. If your business is located outside that jurisdiction, don't worry. Strongly encourage you to send me an email, which my email is in the chat. And I'll be more than happy to connect you with your local small business resource. And once again, this program is focused on the 3 pillars, which is the consulting, the mentoring, and the trainings. As such, you're here today. Definitely encourage you to like and subscribe our YouTube channel. That is where our presentations will be uploaded, along with a vast library of information from all of our previous webinars and from our organizations as well that they have posted. So definitely it's like the Rolodex of information and knowledge and that you'll be able to carry on as more tools for your toolbox for your business needs. Definitely encourage you to visit our website, miamibusinessnavigator.com, along and follow us on our social media channels as um, we promote multiple events, upcoming information, resources for the community to grow and succeed. So once again, we'll go over with the 4 key objectives from today's presentation. We're going to be reviewing the questions to help you determine your business financial needs, identify the various options for your business, along with the available financing options that is out there, and the pros and cons for each financing options. So pretty much there's always a pros and cons and what is best suited for you. It might be best for me going for this route, but for you, it might be completely the opposite. Just like no two businesses are the same, no two industries are the same. So having the Goldilocks approach of your business, it is going to be successful obtaining the necessary funds to grow and for the next phase of the business. So Penny, for your thoughts. Despite having the idea or being good at entrepreneurship, is often difficult to start a business. I know it, you know it, as the struggles and but also the tribulations of starting the business. But capital and equity is a key element for a startup small business venture. So you must explore the different options in order to provide the added equity for your business for you to survive. So before you investigate the financing options for your business, the first thing you need to do is fully assess your financial situation thoroughly. What are your goals for the next 6 months? How are you doing with your accounts payable, the accounts receivables, the operational costs? How is like the industry? How is the market? Or even your supplies? Is it more expensive? So by understanding the full financial situation, that is where you're able to solidify your business plan, the ask, to know your numbers. So you should not only know how much capital you need to get started or expand your business, but also know your revenue streams will look in order to pay back any debt financing as well. So you always have to see the both sides of the coin. And here's some key questions that you need to ask yourself. What is the nature of your need? Is it urgent? Is it something down the road, something that you're thinking about? Same time, what are some of your risks? In what state in development is your business? Is it starting? Have already been established? You have been getting government contracts? And what purpose will the capital be used for? Is it more for inventory? Is it more hiring personnel that now you got contracts to start selling these pens? So what is the overall purpose and the intent for you obtaining the necessary funds? But then focus on the industry. Is it increasing? Is it decreasing of that industry in the marketplace? Is your business seasonal or is it year-round? How strong is your management team? And also, how does your need for financing mesh within your business plan? By having a good comprehensive business plan, at least of 3 to 5 years, that's where you're able to do the capital infusion to see the growth of the business, of one, the growth, and at the same time, the capacity for you to repay back the debt. To begin with, to determine how much capital you need to start with, you must estimate the cost of doing business for the first few months. It could be a one-time fee, as such, incorporating, buying the first inventory products, and also focus on the recurring costs, as such, the utilities, any additional inventories, and the insurances, licensings, and permits. So once again, no two businesses are the same. So having a good comprehensive assessment of how much capital you need to estimate for the first few months will definitely have a clear understanding of your cash flow and also some like the break-even analysis and also the financial management of your business. These are essential. These essential expenses can be divided into 2 different categories: the fixed and the variable costs. The fixed, it could be what is going to be estimated on a monthly basis that's consistent, like the rent, the utilities, the costs, the salaries. But the variables, it could be this month I sold 50 more than I did last month. Or it was a slow month. So that's the inventory, the shipping. It could be any sales commission. Perhaps I had a great sales month this week or this month selling these pens because I'm getting ready for back to school purchases. So these are the variable costs that it varies from month to month. And this is where you're able to focus on the debt financing and the equity financing. So the debt financing, it is borrowing money that you must be repaid over a period of time, usually with interest. While the equity, it is raising money in exchange for a share of ownership in business. So debt, it's repaying over a period of time, like if it's like a home mortgage or a car payment, that usually has an interest. But then the equity is how much piece of the pie are you willing to give up in exchange for the funds that you'll be raising. In the debt financing, it's money borrowing that must be repaid. Repayment is done over a period of time with interest, and that could be a disclosed interest. It could be a fixed interest, variable interest. So there's different capacities and different variables in the payment process, but that is when discussing with the respective bankers and lenders to see which is the best one for you. And the loan is not often secured by the company's assets. What do you own that has the equity, along with your personal guarantee as well? And here are some examples of the debt financing where to obtain them: the banks, the savings, the loans, credit unions, commercial finance companies like the CDFIs, and Ascendus is one of them. So if you're looking for a small capital infusion, definitely encourage you to register with our services. And like that, I'll be more than happy to connect you with my colleagues over at Ascendus. In addition, with the SBA guaranteed loans, the state and local government programs, along with family and friends and former associates, having agreed upon agreement in regards of how much you're going to be repaying me back on a monthly basis for X period of time. Well, the equity, once again, it is in exchange for a share of ownership in business. The most common source of equity funding comes from venture capitalists, a private equity investor that provides capital to companies exhibiting high growth potential in exchange for equity stake. And it could be friends, investors, relatives, employees, customers, industry colleagues that they know the ins and outs of the industry. But one of the first picture that you need to do is to get the prospective creditors to consider you is, how's your credit? That's one of the key questions they're going to ask you. Is it good? Is it bad? Have you missed payments? So I have to have a good gauge of your narrative and your story. So once again, before you even begin to start the process of preparing a loan request, definitely encourage you to fully understand and have a good credit history. In collateral, it's any form of additional form of security, which can be used to assure the lender that you have a second source of loan repayment. So it's like another guarantee. If I cannot do it in the first outcome, I have multiple options that I'm able to repay. Assets could be the equipment, the buildings, the accounts receivables. Okay, I just have one good question, and I'll answer it right now. Accounts receivables, inventory could be considered possible sources of repayment if they're sold by the bank for cash. Also consists of assets that are usable in the business, as well as personal assets to remain outside the business. So oftentimes people might put their house or potential contracts that they're getting. Let me put this so I can repay it. And then in terms of the credit, what credit score they look for, it's a bit of everything. What's the 5 C's? What's the conditions? What's your character like? What's the capacity to withstand it? Like, do you owe more than you're generating? So they're able to see like, because at the end of the day, the banks, they don't want to lend the risk. They want to get the money back with a bit of interest as well. So it all varies. Like some lenders, they like one particular credit score over the other. So it all varies based on what is the end goal that you're using and how much you're seeking. If you're looking for $1 million, okay, this is what you gotta have. If you're looking for 5,000, this is what you need. So everything varies for you to get the necessary funds that's reflective towards the credit. Like if you're like usually in the numbers wise, it will be like in the 600 over 600s, like in the 650s and above. Okay, I have a question. Yes, after I get a loan from a bank, do the other banks know? Yes, because it's a full story. In regards if other banks know about this loan, yes, because you don't want to be shopping around. Like I got one loan from here, another one from there, and then I'm getting a third one in 2 weeks from another bank. No, they all know. So that is the full capacity that you're able to repay back, and you're not head over water with all the debts that you have outstanding out there. But at the same time, if you have multiple loans and you want to refinance and consolidate everything in one, we have a consultant that can assist you on that front as well. So there's different alternatives for you to have a strong cash flow. So like that you're able to grow the business at the pace that you want. And then this is where you're able to focus on the short-term and long-term financing. What is the end goal? What is the purpose of the necessary funds that you're seeking? And what is the time frame? Is it going to be a short-term or long-term? I have a question. How likely is it to get another loan from another bank, knowing that I got from a previous loan? It all varies. Our consultant, he will be able to assist you in that question, as he is an access to capital consultant, and he has experience in the banking realm, so he could definitely assist you on that inquiry. And then just send me an email, and like that, I'll be able to do the virtual introduction as well. The short-term financing is any financing that's generally less than 1 year. It's a quick way to get liquidity. It can also help you fulfill small economic needs and allows your business to capitalize on opportunities. Think of it as a small injection, a small boost to get you over the hump that is needed at this moment. I would need a check within the inquiry of NAV business credit score. So I would need a check, but just send me an email, and like that I'll be able to have the answer for you with that regard. Along with the long-term financing, it is financing that is more than 1 year. It could be a mortgage of an existing building or machinery that is equipment that's costly, that can be taken long-term to lease, which the business can eventually buy it out. It's just like heavy machineries, businesses, business infrastructures, equipment, long-term capital needs need to be fulfilled through a long-term debt, and the long-term financing provides stability, but the total of interest paid over time is higher. So there's always a pros and cons, either long-term or short-term, but it's easier for you to repay it as smaller installments as opposed to a big impact that they need the money like ASAP. And the loans, there's various types of loans. And there's various types of loans available to you, and the terms of those loans will typically determine your business organization, whether you're an LLC, organization, some other kind, but at the same time, the industry that you're in. Some lenders prefer to take this route of loans for this industry versus the other. So it all varies based on no two businesses are the same, no two industries are the same. So everything varies, but definitely having a good conversation with our respected consultants will be able to assess and enhance the conversation when you're ready to get the necessary funds. And what's interesting is that this time next week, we're going to be having a webinar of what your lenders need to know. So that carries on the conversation we're having today with the ask of the homework that I'll be giving you at the end of this presentation. There's various forms of loans. One of the most common ones through the SBA loan programs is a 7A. It includes the best option when real estate is part of the business purchase. It can be used for short-term, long-term working capital, refinance, as what we talked about earlier, of the current business debts if you have multiple loans around, and purchase furniture, fixtures, and supplies as well. It is a revolving funds based on the value of the existing inventory and receivables. You could once again purchase the equipment, machinery, furniture, fixtures, supplies, materials, and establishing a new business or assisting the acquisition, operation, or expansion of an existing business. So there's multiple avenues how you could use a 7A loan. So definitely having a good strategic analysis of how to best get more bang for your buck. Okay, I just have, yes, I did say homework. So don't worry, it's some of you have already done some of them from our conversations beforehand, but some of the homework, it's definitely helping you when you're ready to be loan ready. But if you're already loan ready and want to have that conversation, you're able to cross the T's and dot the I's and be confident having the language of a banker. Okay. And does a line of credit count as a loan? Yes, because at the end of the day, you have to repay that back. And it affects your credit score? Yes, because you have in the debt, outstanding debt, but at the same time, it helps you out through to show the capacity that you're able to repay back, and you have the character that you're a good standing citizen of repaying your debts. So the 504 loan provides long-term fixed rate financing for major fixed assets to promote the business growth and creation. So some of the 504 loans that can be used is a range of assets, an existing business or building, land, a new warehouse facilities, long-term machinery, equipment. So it's the heavy duty items that could definitely stabilize the business and repay it back over time. That the purpose of having this machinery yields me X amount of pens that will sustain the capacity of me repaying it back and growing the business to the next level and phase that I want to accomplish. Microloans. This is where it's a good infusion for any startup business or looking anything of a small amount. The SBA has a microloan program that can be another viable source of loans for your business. Oftentimes it could be up to 50,000, some could be 100,000. So it also varies with some of the CDFIs that are in the community as well. And these proceeds can be used for any working capital, inventory, furniture, equipment, but not be paying existing debts or purchases of real estate. Microloans are available through certain nonprofit community-based organizations. Once again, Ascendis is one of them, and others throughout the community. And we could be more than happy to introduce you to our partners in the community that provide microloans. Once again, no two businesses are the same, no two organizations are the same. So one might be asking for a business plan with a credit score of X amount. One just wants to see how much revenue you have generated. So that varies, but definitely I am more than happy to introduce you to our partners, and you could definitely shop around and see which one is best suited for your business needs. Yes. There's a question about, can people also do a microloan and SBA loan? Yes. I've seen some clients of ours getting a bit of both. In regards of can you receive a microloan to buy a part of a business? I'm not too sure about that, but I strongly encourage you to send me an email and I'll be able to have that answer for you. Now, in terms of the venture capital, it is the equity financing to address the funding needs of your venture for reasons of size, assets, stage of development. And this is more in the in the realm of in exchange of shares and play an active role in the company invested in. So they become a key part of the decisions and the role and responsibilities of the business venture. So some of the pros, it's a good thing about that the venture capital, it can raise money that you can keep. You don't need to repay or take account of the interest rates. You don't need to attach any collateral in raising the venture capital, but it's generally committed and long term. Also, the venture capitalists, they will own a stake of your business, and might at times, depending on the amount of investment, make those controlling decisions. So once again, you're giving a piece of your business. So it could be a 51 and a 49%, or it could be a 10% decision. So it could be, you have to put that in mind based on what they want to do, because at the end of the day, they're providing funds in the business. Then the angel investors is the opposite of a venture capitalist, but it was almost similar. It's these investors have a high net worth, individuals who seek high returns through private investments in startup companies. They seek companies with high growth potential, strong management teams, have a solid business plans that aid in assessing the company's value. They typically invest in ventures that they themselves are very familiar with. So think of it like Shark Tank. That's a good opportunity for you to be an angel investor based on the industries, technologies, their networks. They'll be able to guide you through the operations while providing you the necessary funds. One of the advantages of the angel investors is they generally agree on a flexible investment agreement terms compared to the traditional sources of funding. Often they're very successful and add the business acumen to your venture. They may agree to invest in your business, but it's also risky if they like your idea. Angel investors are often ready to look beyond the financial return. It's continue to grow that venture of yours. It's not like I gave you 50,000, so I want 75 by the end of this year. No, let's think strategically in the long-term vision. On the other hand, they generally are not ready to make follow-up investments. They can be costly at times and want higher returns on investments. So it's once again, pros and cons. It can be difficult task to find out angel investors, but as they usually operate behind the scenes. So they are the ghosts or the phantoms, in other words. So having a good understanding of the angel investors, the venture capitalists, you're able to decide if you want to give a piece of the pie and also have another person to make and incorporate some decisions of the business path that you would like to take. Crowdfunding, this is where you're able to access additional funds. Platforms like Kickstarter, GoFundMe, Fundable help you to build a brand awareness, test the market with your idea amongst investors and consumers. There's multiple ways for crowdfunding. It could be donation-based. For example, I want to start selling my pens right here. Who would like to donate $1 from my pen business venture? So everyone donates $1 and I end up with $50. But equity investment is that whoever invests in my business will get 1% of 1% shares of my business. So now we become business partners because you're my investor. The debt base, it's investors are repaid with interest. So for every dollar you give me, in return, I'll pay 5% interest with the dollar. So like that, you're able to get some return investment. There we go. Donate $10. I'll take it. So now I'll have $60. So then in the reward base is those who donate receive products and services in return. So if you donate $1 for my business venture, once I'm ready and inactive, I'll open the doors. I'll give you 3 pens, one for you, one as a backup, and then one you could give it to a colleague of yours. So that's the service and products I'll be in return turning. So just to help me to launch my business. So there's other ways of crowdfunding, but these are 4 common ones that definitely helps with crowdfunding phase. And peer-to-peer is essentially involves in sharing your idea with other people in hopes that they will also invest in your business. So let me just open the door to everyone who is interested to buy my pens, my pen business, and it could be we need to determine how much we need to borrow, define the purpose of the loan, and also um, fully understand the listing online. In in this way, if you find takers, um, you might have a good source of financing your business by having a conversation. Hey, you know what? I'm actually interested. What do you need? What you don't need? And what can I do to help you out so you could elevate and we become business partners? Some of the pros is that financing your business through peer-to-peer gives you the advantage of choosing from a host of lenders, so settling the financial repayment terms that is best for you. It also makes it possible to avoid the lengthy process of taking a loan from the conventional source. So there's different opportunities, different routes. And as well, it could also be the terms of lending can be very vague. It's like, yeah, just pay me back whenever you want, or yeah, just give me the money whenever you generate X amount of dollars. So there might be hitting terms, hitting agendas. So definitely check carefully before going ahead with this model of financing. With family and friends is also a viable and easy source of financing. If you're lacking strong credit history or don't want to hassle dealing with banks and private lenders, you turn to your family and friends. Though this is a quicker way to access the cash with fewer hoops to jump through. But at the flip side, if the business fails and you're late repaying back the money, you might be headed to with some conflict with your family and friends. So it puts the very awkward conversation during Thanksgiving. So like if I want to start selling my pens and my grandma gives me $50,000 and I decide to use it for a vacation stuff for the business, and she actually needs that money for whatever, it's gonna be really uncomfortable that I pretty much took my grandma's money. Um, but you must decide whether you want to finance from family and friends as a loan, as an investment in exchange for a share of your business. And having a good agreement or repayment plan, one, it shows your character, and also, once again, is a business transaction. So definitely having good faith, definitely having a good traction to repay them back. So there's always pros and cons with the family and friends. And here is the overall recap of of the of our conversation is determining your financial needs. Why do you need the capital that you're seeking? Oftentimes we have clients that they say, I need $50,000 because I need to start selling these pens. But then I want to use that to market my business. I need to buy a new truck. I need to hire someone. When you start doing the calculations, it's actually $250,000. So now we fully understand instead of 50 for one area, now it's 250. So what do we need to do to get the necessary funds so we can accomplish all these goals and metrics? And also, do you have the capacity to repay that back? So fully having a clear understanding of your financial needs definitely will help you assess what is the most at stake priority, and also the conversation with the lenders that is needed to enhance the business plan, the marketing plan, to have those projections already implemented to showcase that you have the capacity and the collateral to repay that back as soon as possible. Also, identifying those various options for your business. It could be, this lender right here provides an X amount of dollars with at this percent. This lender provides this with a higher interest rate. So you have to pick and choose. It's just like, think of it as buying a car. You do a lot of research. I like this car because it's more mileage, fuel efficient, and it's of the year. But I'm stylish, so I like to have this car right here instead with a sunroof or a convertible. So by having various options is what is most fitted for your business. Along with the various financial options are available, because perhaps I might not go to a traditional, but perhaps my grandma might lend me the money because I'm her favorite grandson. It could be, whatever options are out there, but then we consider the pros and cons in everything. So this is something that you definitely have to think of the different financing options that are available that is presented to you. And at the end of the day, it's your call, but you want to be a wise decision. Once again, being an entrepreneur is taking that risk. But the purpose of us helping you out is taking those calculated risks. So definitely, I want you to be mindful of everything that's out there, that could definitely address the needs of your business. So once again, these are the homework that we were discussing, and I know that someone already was asking for that. So analyze your financial situation in your business. You must do is determine the business needs. You must arrive the exact amount of financing that you need and the purpose of what you need it for. It's like you're earmarking. I need 50,000 for this, 10,000 for this, 25 for that. By having those earmarks, you're able to have a full concrete um discipline as this is what I'm using my money for. Instead of I need 75. Once I get it, I'll cross that bridge. I don't know what I'm going to use it for, but it's going to be there. No, by having a clear understanding of the exact amount of financing that you need and for the purpose, yeah, you're already understanding your financial situation of your business. 2, create a solid business plan. I know that some of you in today's presentation have attended my presentations of creating a business plan. Definitely, this is the opportunity for you to enhance or create that business plan, because this is what the business plans are here for, to present it to lenders, business partners, investors when you're ready to approach for financing. Evaluate the financing option that is best for your venture. Once again, no two businesses are the same. No two industries are the same. No two lenders are the same. So evaluate the pros and cons of each of those options and define which is the best option for you. Think of it as the Goldilocks. One is too high of interest, one is too low of a loan amount that you're seeking, but one is just right that has the right terms of repayment capacity, the interest, and the loan amount. So finding the one that best suits best for you will definitely help you out in the long term. After you have decided the financing option that best suits your business, approach them. If you're deciding on a loan, review how your business venture is bankable with the terms and focus on the 5 C's. Throughout the presentation, we had definitely brushed up almost all the 5 C's, which is your character, the capacity, the capital, the collateral, and the conditions. So we have definitely discussed all these 5 C's throughout today's presentation. So by improving one of the 5 C's, if you're lacking on one side over the other, improve on it. You want to be bankable at the end of the day. So having an effective improvement or having a good improvement of the 5 C's, you definitely have a good you have a good chance of getting necessary funds that you're seeking. But once again, there's other variables that we cannot control, but at least you're have a seat in the table, an invite to the seat at the table. And then once you're secure the respective financing, think of the conversation. What's next? What are you going to do? You can concentrate on using it best to expand your business. I need the $50,000 because I'm going to hire 2 salespeople that hopefully they will be increasing my business by 10x, because they're going to be in the streets, they're going to be hustling, and everyone needs pens for back to school. So having a good opportunity for you to explore those opportunities once you get a capital infusion in the business, that's how you're able to be very successful for the next phase and the ongoing growth of the business where we like to go. So I'm going to open up the floor for any questions, concerns, comments, anything that I could do to be of assistance. I strongly encourage you to put it in the chat, and I'll be more than happy to answer any way I can to the best of my capacity and ability. Also, strongly encourage you to register at our center on the Navigator program. Definitely is a good opportunity for you to connect with our business consultants in access capital, marketing, government contracting, because oftentimes, capital, you need it either starting a business or growing the business to the next phase. So definitely encourage you to register, and we'll be more than happy to connect you with the appropriate consultants on that regard. And then once again, as the upcoming events are going on in the chat, definitely the part 2 of today's conversation is on the 20th, which is what your lenders need to know at 1 p.m. Definitely encourage you to register, because our consultant, he'll be present, and you could definitely ask him the hard questions. Ask me the easy questions, but the hard questions, send it to him along with the follow-up consulting meeting, and he'll be more than happy to assist you on that regard. Okay. Does anyone have any questions that could be of assistance? And today's presentation is being recorded, and also all participants will be receiving the presentation as well. So once I receive the video file, I'll be more than happy to send you the information as well. Okay. Okay, perfect. Thank you. Okay. Well, loan consideration will be usually based on personal credit. Well, it varies. Is this going to be more for a personal loan or for business loan? And then at the same time, our business consultant, he'll be able to assist you, because oftentimes, like, how is the business structure located? Okay. Okay. Thank you. Thank you for attending. Okay. So, I don't have any additional questions, but, okay. Yes, yes, absolutely. I strongly encourage you to follow up with me. Like I said, we're family, so anything I could do to help you out, it'll be an honor, and definitely will help you out to the best of my ability. Let me put my email in the chat, so like that you could email me directly. Okay. Perfect. Yeah, yeah, absolutely. Yeah, just email me directly, and I'll take care of you. So once again, thank you for attending today's webinar. Like I said, anything that could do to be of assistance, definitely encourage you to like and subscribe our YouTube channel, register for consultation, attend our next webinars. Like, we're here for you, and I want you all to be successful and growing and creating that economic impact in your community. So I want to thank you all once again for attending today's webinar, and I'll be looking forward to seeing you next week. Take care, everyone.